All right, let's jump into things. Got a bit of the weekend wrap. So where we at? 10:42 p.m. on the Sunday. So it's the 2nd of March. So we've got a new month sort of starting now as well. Obviously, market closed yesterday, closed today, and that. So tomorrow will be the first trading day of the month for it all. And look, we'll sort of start off with DXY because this is actually playing out pretty much as as to plan kind of thing, so to speak, at the moment. And that I really did think we would have had one more lip down here. As you can see, this is where I expected the buyers to be. This is the price target that we had on it. It was this big bear flag from back up here. Gave us a little measured move down here as well. And really, this is a sort of a bit of a horizontal, which I thought would have come into effect a little bit more, a little bit lower. Obviously, this is, if you get on the daily, you can probably see it a little bit clearer here. We can see that, like, from a daily perspective, this is the buy zone here, definitely. There is a little bit of a zone through here, but not really, like, because it chopped over it so many times. I kind of sort of basically just disregarded it. But I guess if we excuse me, pop that right across the base over here, this little push up over here. This comes in around where the market seemed to have been valuing it here. But short of that, I can't really see a lot of sort of technical reasons why we didn't get this last little push down here. As I said, so look, that did sort of catch me a little bit. I thought we had a little bit more, just one more push down before firing up, but it seems that no, that was it. We had this little wedge that I've been looking at. It broke out of this, and it really, the last couple of sessions, it's just sort of ran away with it a little bit. So there's been a series of little bits of data, news, these kind of things that have sort of come in perfect timing, as they tend to do with these things, to give us a sort of justification for this moving up here at these kind of technical points. But really, it is sort of kind of playing out to what we've been watching, or kind of sort of playing for, is this head and shoulders from, yeah, I think it was back around sort of start of January or something. We were thinking, look, this could start to line up to something like this. Um, but yeah, so to come back down here, we've got a nicely kind of defined neckline. I guess you would drag this up here, call that your neckline, which would change your price targets a little bit. But look, we'll get to that when we get to that. For the time being, we are seeing this little push up through this zone here, and in typical kind of DXY sort of price action, as I'll get to in a second, on the lower time frames, it looks like it's rolling, and then it just jams up more kind of thing. So this was the little plan when we were over here that RSI would come down, flatten out, and start to come back out about the time that we got this right shoulder potentially coming up here. So look, it is sort of moving up here now. It is a bit expected from a straight sort of just technical point. If you're looking at that, you're like, okay, we've got a wedge. Your little wedge measured move takes you all the way up to 108.60 from that break point. We've also sort of got an RSI to support it to sort of move a little bit higher. So look, I don't think it's we're going to come on Monday and be like, "Boof, okay, here we go back down." I do think this little US dollar buying spree will continue. Though I don't think it's going to be something that's going to be up to the most recent highs 1010 kind of area. Look, it could, anything could happen, of course, but this head and shoulders is what I've been sort of trying to gauge for a while. And I still think this is just that expected period of USD buying, which I've been calling through this period over here. I was like, look, we're getting close to the end now. We're getting close to the end now, and here we are. Now we're getting the little push up of that sort of US dollar buying. So if we jump on a lower time frame, you can see that it did come up and sort of found itself a little bit of a sort of a little bit of resistance around these previous highs over here, and coming down in towards the end of the week, because obviously pushing up through here, it was pretty flat. It was pretty flat, and then there was those headlines that came out where Zelensky was basically having a little sort of a tantrum with Trump and with JD Vance, that in regards to sort of like getting more money and more help from the US, and basically just like, I won't bother getting into it too much, but this guy is just seriously just goes around with his hand out. He's like a junkie and shit, basically, because he's just like, oh, you got the money. If you've got enough money to lend it to me, you've got enough money to lose it. That kind of attitude with it all. So yeah, the whole thing's looking pretty not great on a whole sort of geopolitical kind of sort of landscape of it all. Because these kind of things, you know what I mean? Like, he's been given a lot of money. He keeps sort of pushing harder and harder and harder with it all, and that's potentially sort of turning into a division between a lot of these other countries and nations and that. And over what? Like Ukraine, like a war that's been going on for 3 years, where this guy as well, like, he sort of said a couple of times, said 3 times or something, yeah, look, we're going to make a deal, going to make a deal. Then at the last second, oh, no, no, I'm not going to. Oh, you know what? I'd give up the presidency if we got into NATO. Like, everybody knows that they're not going to get accepted into NATO. That would force World War III. So, there's no point. It's an empty promise to sort of say, oh, yeah, I'd do it, but here's some unrealistic thing. So you can sort of come off sort of looking like you're the guy that's trying to do the right thing, so to speak. Anyway, regardless, that's not what we're here for. We're here for the charts. But it is important to keep an eye on this thing because this is something that could affect risk. And obviously, in terms of risk, that could affect Aussie. There's a number of things going on with Aussie at the moment, which I'll get to in a moment. Most namely China, and the tariffs with the US. But these sort of things, as sort of just mind-numbing as they are, it is something to sort of keep in mind because these are the kind of things that, as you can see, when Trump put out that announcement afterwards, the market just went bang. Look, it looked like it could have been rolling as putting in lower lows, lower highs into a resistance area. That was a justifiable roll over here. And then he puts out a headline and sort of says, oh, so, uh, Zelensky's not ready for peace or whatever. Doesn't matter. The point, it was a summary and a fallout of that sort of stupid conversation they all had. And the market reacted. The market went bang. So it's definitely something to keep on the radar at the moment, as to how this sort of thing progresses and that, and what the US's response is to it, because you can gauge by these little events how the market takes these sort of bits of news and data. So yeah, if we see a continued sort of negative on that, that could be fuel for this US dollar creep to keep sort of going up a little bit here. So yeah, it'd be interesting to sort of see how the week ends. Sorry, how the week starts and that sort of comes tomorrow. And then we've got, if you look, I don't really sort of buy into these sort of weekend markets so much, but I will just point out that it was a couple of weeks ago. Actually going back, where was it? It was that big gap up kind of thing. It was this period over here. Weekend markets were like massive over the first lot of that sort of talk of the tariff. And, whereas sort of some markets are like, 0.07% movement over a weekend, these things were like 0.7%. And that's kind of the resulting action. So, look, although I don't sort of really buy into weekend markets, if they do have some massive number, it's worth keeping an eye on because it gives you an idea how the market might be sort of opening up come Monday morning. But at the moment, they're generally around that 0.0452% kind of thing. So I think that goes to show that sort of obviously this is being taken note by the market. It was a big push into the end of it, but if there's nothing that really builds on that, other than Zelensky going and having a meeting with the UK and the UK sort of pledging a couple more billion to him, if there's no more sort of parts of that, it's like I don't imagine that to be a catalyst to give you another gap up to be opening up here, for instance. So you may sort of see that this is just like, oh, knee-jerk reaction, end of the week, could go bad. Let's position ourselves just in case. Nothing happens over the weekend. Boom, that move undoes, and you come back into this little zone, just sort of like, pretty much where we were, or where we kind of just were into the end of the week, sort of prior to all that stuff happening. So I think sort of very much sort of you come down here and then it could just continue on and we could still see the move up a little bit higher. But I think this was more of a knee-jerk reaction to that little, headline. Excuse me, to that tweet on Truth Social. Um, and people positioning themselves at the end of the week just in case things went really bad and we saw one of these sort of gap up episodes like we saw a couple of weeks ago. But if that doesn't come, I think these positions here will undo themselves. We'll come back into the zone here, this 107.28, and then it's back into where it was. It needs to force and hold itself above this zone over here. I think this is just a bit more of a knee-jerk reaction. So in terms of look where it could sort of be going now. So look, you have to honor the fact that it did move up, I suppose. That's where you've got your pullback. As I said, pullback comes right in line with the 23 there. If it does want to do it, if it breaks under this zone, You can see there was a little bit of a zone just down over here. This thing's not liking clicking too quickly. That zone there. I think if you get back below sort of like, 107.20, you might see a deeper pullback to this 106, 618 retracement. So I'd say that that's probably, if you get under here, you come back down to here. Actually, let's do this one. If you get under here, bang, 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 something like this, and then a move off from there. That's pretty much the direction in which I would sort of see things happening. If we do get a bit of a fail here, because this would almost look, although it was a knee-jerk reaction, it's almost like a fail breakout because, if it's moving up, market's got the price there if they want to grab it and continue. If they use that as a sell opportunity, you're going to see a move in the other direction. Doesn't mean the whole thing's going to fail and break down, but it probably just means that you're probably going to see a little bit more cooling through to this period over here and that. And really, even then, that's just give you a retest of these kind of levels over here before you see buyers step back in. But I do think this whole area is going to play out a little bit more. I don't think it's just going to be like that's it and then boom, back down. So US dollar strength probably through the week as a theme is something that I probably expect. All right, let's move along. We had gold. So this is the trade of the week, this one here. I was shorting sort of like through this whole period here and, in and out, in and out, in and out, as I do. I shorted from 55 was my best up around this level over here. I threw a little Hail Mary on it, two positions short, 55, stops at 60, and it just went poof, nailed right down. Of course, got out there. Then I started shorting again, 51 and 52, up into this zone over here. Actually went quite heavy into this zone over here because, as you can see, even though this is on the 1 hour and it's not a perfect negative divergence. So this is the thing that's sort of like, people wait for the textbook, it's price is moving up and then the negative divergence. If you look at this little period through here, it's almost back up to the top here. So it's a very, whoops, I'm doing too good with the old clickers today. Very close through this period here. Like, it's almost back up to that sort of resistance level here. But the buying pressure through these periods here, and then the second effort here and here was significantly less. So although it's not price moving up into an actual technical negative divergence, you are seeing a lower sort of RSI and pressure that got it back up to this area here. And this is very grindy. This kind of move here is just straight up like chug, 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 chug. So 51 and 52 or so, I was sort of started shorting a fair weight out of it and just all the way through the week. So that was probably one of my better weeks than that for quite a while. So it was very much. And this is the thing with the gold, not just gold. You've got the analysis. That's fine. You need to execute on these things, and that's very much what I did. Management. I'll give myself a 9.5 because I was absolutely hammering this thing to the downside and that. And I've been calling for these larger fib levels, particularly sort of through when we had this break and came through here. I said, look, price needs to be punished. This is how I view it. This is how I word it. That you've got to keep that trend going. If you don't keep the trend going, well, fine. Price is going to be punished. And you break, you retest the break level, you come down, you bounce, boom, 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 whichever, whatever. But generally, if you've got a trend that's been going all year, you don't just break once and break twice and that's it. Price has got to be punished. And I was saying, look, once you're under the trend, now we start to look for the fib levels, the larger fib levels, which are, the 28.67, and then below this is the 28.13. So look, it did have a little bit of a push, sort of coming into the end of the week. That little Zelensky episode probably bode quite well for it. But again, it's just the end of the week, so it's not like, okay, here's a big full turnaround. I think there's still definitely downside to come through here, but there's also the chance that you could see, a chance to look up above here and sort of squeeze out some technical short levels through above some of these highs before we get back down. But if we get an option up around this sort of like, 2890, 2900, if we got up to 2019, these kind of, levels here, I'm wanting to short a lot more. I think we do have a little bit more to go with this. I don't think this is going to be your V shape that comes back up like this. So I think sort of, I wouldn't be surprised if we could see a little bit of a squeeze this week up towards that sort of, sort of 2890s kind of level. before we see people go, yep, that's good enough. I've been selling it, selling it, selling it, selling it. These people just got short into the end of the week. Let's squeeze them out, give us a better level to sell it from, and we start the selling procedure again, and we start rocketing down. But I do think that these are the kind of levels, 27.70, 28.13, these are the kind of levels that we're looking for before you see any sort of significant sort of basing for a bottom. Just quickly as well, like this is the thing that I've said a couple of times, like with these major gold runs, to see a top, there's two things, two different types of tops I like to see. One is a well-defined straight line, like horizontal, which we have here, which is just bang, 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 bang. Like even this trend line was great, but all these sell downs came in and really shored up this horizontal through here. This time we actually got a back test. Previously we've had these things and it breaks these levels, you just don't get the back test. And it just falls and just completely melts down. But these kind of tops are very good for gold. When you're going sideways, defining those like sort of base, that sort of horizontal, the base of this little range, and just bang, 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 and then poof, broke through. So yeah, this is honestly one of the better trades that I've taken, just in terms of the three aspects: the analysis, the execution, and also the management of it. So that was quite a good trade there. So as I said, look, I think we could definitely see some short-term upside, but this would just be a temporary relief before we get to a level where we're happy to sell it again, and then we short and we sort of look down to these lower levels. That's the plan sort of moving forward. I think sort of above 70, you might sort of see a bit of a squeeze, as I said, probably targeting around that 28.90 would be nice. Get into Aussie, and Aussie has just been absolutely demolished from its highs this week. So, look, this is just a recap of it. We sort of had this period, where was it? It must have been just here. Yeah, because we went up to 50. Of course, and these are where the arrows are. So, this is where we had the CPI coming out, and we saw US dollar strengthening up coming into this period. Um, it bounced up here, not bounced, it sort of ground up a little bit while other things, gold was taking a bit of a whack, the other US dollar crosses were getting a bit of a whack. Aussie was actually holding its own and only dropped like 10 points or something at one stage through this period here, while gold sort of dropped off like, 20 bucks, 30 bucks or something, which should in a normal environment, Aussie would go with that and go bang down with it. But it didn't. It held and sort of moved up a little bit more because we had CPI, and CPI was expected to come in a little bit hot. And this was the plan, that sort of like it comes in a bit hot, we get a pop up here, but then of course, this we would just be sold into this. So this was the plan, to sort of get back up here and then start shorting it from this level up over here. But as you saw, CPI came in like flat from last month and under expectations. Market sort of didn't know what to do at first, but then go, hold on, end of the day, look, it's not what we wanted. We bought this up with a faint hope at that. And this is what I was saying. If you go back to that video, and I think it was Tuesday or Wednesday morning, that I was saying that sort of once you take away that little thing that kept it alleviated through here, which is the idea that we're going to have a hot CPI print, once you get rid of that, i.e. the moment passes, so if we did get a hot one, it would have pushed up, the moment passes, this was the plan for it to get sold into. It didn't get that pop because it didn't come in hot, but it still got sold into, and sort of came down, down, down. And look, we've had little bounces, tried to hold these little zones through here, but as you can see, it just cut through one, bounce, cut through another, bounce. I did actually look at this. So it's coming down here, sort of somewhat orderly. Which one? I put a different Aussie chart over here. Um, I just put these lines on here before because I was like, look, you know what? It's quite an orderly sort of sell down through here. Like, bottom of a sort of channel. You got the tops over there, little overshoot areas with the channel as well. It's fine, fine. But really, it hit this point here, and it just went bang and straight back down the whole way. So if you put on the 4 hour, you can see it a little bit here. It's quite orderly, sort of up, down, up, down, up, down, up, down. Yeah, but once it broke this, it did not look back. That's 62.83. Dropped almost 90 points in one direction. So it tried to hold that 61% move from the lows. This is that little gap that we saw, where we saw there's 0.07 in the weekend markets, not the 0.007 or whatever. 0.7, not 0.07. Anyway, it was trying to hold the 61%, and it was doing okay until we had that sort of Zelensky thing. 5 o'clock is where we sort of started home and bang, dropped down. But, recovered a little bit through. So I wouldn't worry so much, as I say each week, I don't worry so much about the last couple of hours of a week because, nobody's at their desk in that. I'm surprised the market moved much at all with that Zelensky thing because no one was around. Um, but anyway, the point is, orderly, and this is the thing, this is coming down and people sort of, okay, let's sell it down to here, we'll buy it up here, okay, we'll sell it down a bit more, we'll buy it up here, and that's what I mean by orderly. When you see this move here and it just goes straight down, this is emotion. This is like, okay, let's get out of this, I don't care, I'm not waiting for it to sort of pop back up and I'm going to sell into it. This is just, let's get out. Point is, with these moves, they don't last, one, forever, and two, they can equally just bounce just as hard to undo these sort of areas. So, look, again, it's hard to sort of like, when something's getting whacked as hard as this, you look at that, to not sort of think, okay, it's just going to keep on going down. It probably will keep going down a little bit low. I don't think this is the bottom necessarily, but it doesn't mean you can't get a little bit of a rally up here before we go back down. And as I said, if there's no sort of explosive bits of news over the weekend, you might see a little bit of the pressure that was really keeping this at the lows towards the end of the week. Like this is in like a 10-point range. The pressure that was sort of keeping this at this low down here, you might see a little bit of that sort of come off and potentially see a little bit of a squeeze up. I don't think it's going to undo the whole thing, but you can certainly see it back up towards maybe top end of sort of 62, 60s in this kind of period here where it was sort of thinking about it before it just dropped down again. So look, I think Aussie could see some up move. If we do see a little bit of, as I said, goes in line with the same sort of thing with that extra move in DXY. If that doesn't eventuate into some rockets on open tomorrow, I imagine you see a little bit of that US dollar hedging come off, and then you sort of see these things sort of bounce up here a little bit before the market goes, okay, yep, sweet, we've filtered that little part out, and then we start to do whatever we were doing again, which in this case is selling Aussie, and sort of see this sort of maybe move back down towards the low. So I think we're just going to end up having something like this. I'll put it down here. Something like this for a little while. I don't think we're going to see any mass recoveries till we get some sort of news that may support this kind of thing. But I think we could sort of see a little bit of upside before we sort of target the lows for any sort of continuation. I think above, if we sort of have a look for sort of say Monday, get above this zone here where it was capped coming into the end of it. And I think that could be your sort of like little move higher. Sort of like almost kind of like range here, failed breakout, boom, move this back up towards sort of like, maybe 62.50s. It's a 40-point move from where you're currently at. 42. It depends on where these things close. Some of them close at like 62.03. This thing's saying 62.09, whatever. Up to around these kind of zones over here, 62.50s, and then maybe a bit of a sell back down into it. If we don't have any sort of fireworks come Monday. Which at the moment, it's 11 o'clock on the Sunday. Haven't had anything. Like, there's a lot of the coverage of that conversation that, Trump and Zelensky had, but, nothing serious is really sort of played out yet. The one sort of thing that you're probably looking for at the moment is the tariff stuff. I think that's going to be the big driver in terms of headlines for this week. And then, of course, we got NFP, we got Aussie retail sales. We got the RBA minutes coming out as well, but the RBA minutes, we'll see how they sort of react. The market reacts to that, but you kind of cover this with the press conference as well. It's no like, oh wow, I wonder how they were thinking about it. They can ask most things they ask during the press conference afterwards anyway. So I don't know how much of an impact that one will have, because I mean Bullock already sort of said basically what their stance was. So yeah, we'll see if that moves things too much, but I'm not expecting a great deal from the minutes. Downside on this, I think if you break through the lows from that little dip down there, below that sort of 61.90 level, look, yeah, I think around, probably just going down to the 60s and then take it off in chunks on the way down. But yeah, I think even if this is to go further down, I could see this being a little bit of a bounce. through down through there, or maybe, as I said, around that sort of, that 64.40 area kind of thing. So maybe a bit of a move if we get back above, those 23s. I don't think there's a massive upside to it, but, same way, maybe up over here. Look, top side did move up to sort of like, 62.80s if you do get a bit of a run, but I would say more likely into this little congestion zone that we've got over here. And then sort of maybe retarget the lows down that. So maybe a little bit of a push up early, particularly if you see that US dollar sort of taking their positions off if nothing fires. That could see some Aussie buying there as well. But yeah, as I said, the China tariff talk is what's going to be moving Aussie this week. All right, and flip along. So we've got silver. Silver continues to be sort of bashed. I'm not really doing anything with silver at the moment. You can see it's really sort of come back down to these lower zones that we sort of saw, almost down into little that next little buy zone. But as you can see, orders down here, but nothing filled. As I said, I'm not really too focused on silver at the moment. I think the sort of the smacking of gold is the play. Silver's obviously come off quite well from the highs here as well. I mean, we're back down. It's dropped. What's that? Uh, $2, 250 or something. So that's 6 or 7% or something. So that's not too bad. Actually, what is that from the top there? Yeah, 7%. Mathing good on the Sunday night there. Um, so yeah, look, it's come back. It's found sort of a bit of a bounce around the 61% area, around the top of this previous range over here. And this is what I'm probably looking for. I'd say probably this to pop down into here. I think we do same with gold. I think we have some more downside. I think we could see some upside and then more downside, like rebalance this area through here. Sorry, 1 second. And I'm back. So yeah, look, I'm not in a rush to sort of get back on the silver train at the moment. I do think that we do have more upsides with these things. However, I'd probably like to be buying this, as I said, around this kind of area down here. And I do imagine if we are going to be going back up over to these 32s, that we're going to see a little bit of a replication of this kind of area through here. So I think there'll be plenty of options to get a position long to sort of get through this area here. I was looking at this as the last sort of pullback, but now as I zoom this out, we can drag this probably out a little bit further and say that this is that move from, basically from the year. So if we go from the year lows to the year highs, coming back down here, 61% is around this area over here. This is the kind of area where I could see us sort of maybe sort of stuffing around for a little bit. A couple of failed attempts to continue down here. See buyers, hold it, hold it, hold it, absorb it, and then move it back up. But yeah, I do think this probably sort of, I do think of start that again. I do think this could be moving back up, but I don't think it's going to be doing it tomorrow. Put it that way. All right, where we at? So copper. So copper's been a bit of a wild one this week as well, off a couple of headlines. Trump sort of tweeting again that he's bringing copper back to manufacturing or something, or manufacturing whatever. The copper industry back up in the US, and it absolutely loved that. It jumped right up here. I covered it at the time. It was like 4.5%, 5% just at this breakthrough here, but without sort of any sort of sustained bits of actual change in the landscape, there's no reason for these things to just continue firing up. And this is what I said at the time as well. Like, these headlines and bits of data and that kind of stuff, if they're not landscape changing, as in like new actual tangible evidence is produced, if it's just sort of like a bit of fluff, a bit of talk, it's a headline, even these tweets, nothing's really changed. It's just people going, whoa, yeah, he's bringing it back, let's buy it, bang. And then, hold on, mate. Has anything actually changed since yesterday? No. Oh, wow. I just made 5% in like, a couple of hours. I'll take that. Profit. Boom, 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 and back down. And as you can see, it completely undid that move. Okay, so, there's not a lot to it. What we are sort of seeing in terms of, we get on this higher sort of time frame here, what we are seeing is these sort of levels sort of shore up a little bit better than a little bit sort of as much as we could expect them to. Sellers were here previously, came through to that high level, just kissed into it. Sellers moving back in here again. So this is the level that you want to see it close above. You want to see it close above 474. A close up here, 4 hour or above, and away you go. I do think that this seems to be quite a strong line of buyers holding over here. Got very close to the buy zone before it took off, came back down here, still seems to be holding it. This little pink line through here, as you can see, it's not a major zone, but it was those previous highs before that last little drop down there, just after. Sorry, this is just before the election. So just before the election was there, bang, sold down, boom, 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 boom. So those highs just before that little area there where it trapped people in seems to be holding pretty well for a little bit of a support through this zone here as well. So I think, look, if we do come down, I still think there's levels here. I've reduced any sort of orders I have around this area now because I would have liked to have got a fill then a bounce. I think there's probably a chance that we'll probably just see a bigger range start to build through this area here. And a close outside this box, I think will probably give us some direction. If we get a little touchdown into here and then shoot back in, that's great. If we get a touchdown here and then close out here, then I'll just sort of just end those positions pretty much straight away. Because if we break down and close, then I think, yeah, we could probably be looking to come back down to maybe the 78 or so. So it's a bit more risky of it now. It would have been nice, like I said, I was targeting the 61% as we were coming back through this zone here. Would have been nice to get the fill then and then go. Now we're coming back into it. Each time it's weakening it a little bit. It's got a higher chance of going tap, 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 bang, and crashing right through. Particularly if we're seeing silver and gold have a little bit more downside. And finally with China, it's sort of breaking out of this little sort of falling resistance that we did have. It is sort of moving up here. We did get this one sort of tapped down into price target, and this is the kind of move that I'm talking about where, you know, you've got little level, little level, little level, and then comes down, touches into it, and then explodes back out. That's the kind of move that I'm looking for with some of these things, particularly, as I said a second ago, with copper. So, look, it is sort of slowly grinding up, doing its thing. I think this is the level to watch, 7-1 or 7-3-1. A close out here, and you're really looking at this potential move up over here. So we got the breakout above this level here. The question now is just, do we... So, where are we at here? Do we sort of find a little bit of a range through here? Or fall off the ledge and sort of come back down to the side over here. But this bigger box is kind of what I'm looking at for the next major break. But it means that we could probably see some up and down grinding through this area through here. So yeah, again, nothing major, but below this level over here, above that level over there. That's what kind of like what we're looking at. All right, so have a quick look at the news coming up for the week. What we got? We're into a new month. Bang, here we go. So come Monday, look at nothing major sort of coming through here. We've got job advertisements, whatever. Inflation gauge, again, yeah, whatever, not really sort of big market moving stuff. Bit of China data is probably worth keeping an eye on. Catch the manufacturing. If we see stronger numbers here, slight kind of help for you know, in the yuan and then in turn Aussie in that regard. But as I said, I think the big thing to watch out for on that front is the tariff news with China at the moment. So they're looking to be slapped with another 10% additional tariffs. They've also got Canada and Mexico having their 1 month deadlines and that sort of kick off on the 4th, so Tuesday. And so we're going to have to sort of see what the market kind of thinks of that. I did see sort of Mexico sort of sent a whole bunch of drug, what are they called, drugs or sort of gang bosses or whatever, cartel bosses, over to the US to be prosecuted. So it's kind of like, okay, are they helping out with this? Because I think the big thing with those guys at the moment, obviously they're trimming down their number of illegals coming through the border or whatever. And I think that's what he wants Canada to step on a little bit more. But the drugs are the big sort of thing over there. The fentanyl is the big talk. and the crime and all this kind of stuff with that. So I think if they can see that sort of Mexico is playing ball and trying to do the right thing, I think there's a chance that they go, okay, let's give it another month or 2 or 3 months even, and see where they're at from there. But if as long as they're moving in the right direction and showing some sort of credible effort to rectify the situation, I don't see why they'd be like, look, you're doing this. Let's nah, you haven't done enough. Let's hammer you with the tariffs. I think they're trying, or at least showing that they're trying to try. And I think that'll buy them a little bit of time. As for Canada, not so sure. I haven't really seen anything on Canada doing anything. That's it through Asia. We've got commodity prices. Again, not a big market mover kind of thing. Not much. A few more sort of PMIs and that sort of through Euros. Actually, Euros just been a snoozer of a session recently, really. Excuse me. ISM. So again, US data is what we're kind of sort of looking for, but I think the tariff stuff is kind of, I said this the other day, the tariffs I think are holding up the US dollar more than the data is at the moment. The data's lackluster. It's nothing special. We've got sort of pretty flat numbers here. We've got, a little bit of a slowing down expected here. I mean, above 50 is still kind of expansion, but expanding at a slower rate. See it like that. So the manufacturing prices here are still fairly strong. But, maybe this is part of that whole build a back better or whatever it was called. Oh no, that was the other people, wasn't it? Yeah, anyway, whatever. So that's something to look out for Tuesday morning. Moving through here. So yeah, as I said earlier, we've got the minutes coming out from the RBA, and retail sales. Retail sales looking to tick up here. So again, these are the small little bits of Aussie data and that if we have stronger retail sales, more money still floating about, people got disposable things, you know what I mean? It's sort of like they've got an extra $80 to spend per month or something from their home loans or something now. Well done. And there they are, supposedly outspending it, or so they expect them to be. It doesn't make any difference at all. Nobody's jumping with joy really for $80 a month. Like, that doesn't even get you lunch or dinner. But anyway, so a stronger number here, a tick in the camp for a stronger Aussie. But again, doesn't really matter what's happening with Aussie local data, particularly these lower tier bits of data, like retail sales. Retail sales, that's fine. It'll hold more weight in the US than it will in Australia. But even if we have sort of like, Aussie dollar strength data coming out of retail sales, or like a really strong sort of retails number, and if you see US dollar being bought up, this becomes kind of a moot point, and the market doesn't really care so much. So that's something to watch, but it's not like, oh my God, we're holding bated breath to see what the retail data comes out like. Through the rest of the day, not too much through there. We've got UADA, the Bank of Japan, BOJ sort of governor speaking. Look, the yen is slowly creeping. It is really, I've been saying this for the last couple of weeks and that it's really picking up a little bit through here. So that's certainly one to watch in that. I see UJ mentioned endlessly as well, and that's sort of back testing at some interesting levels at the moment. So could probably see some more downside like with that. And again, like I said sort of the other day, that yen at its heart is a safe haven currency. So the fact that it's sort of bouncing back while things are sort of like falling over could be dragging some strength away from DXY. While sort of like equities and everything else is crashing, because everything got pretty hammered this week. I did see a good note or mention the other day from somebody saying that the biggest bear rallies in uptrends, and the biggest bull rallies are in downtrends. So we've just had a big with that unpacked. We've just had a big massive bear move in uptrend. So that gives credence to the idea, or gives sort of some sort of breath to the idea that we may see a little bit of a bounce as well coming through there. Again, GDP, Aussie data looking to tick up. That's looking a little bit more positive. This is on Wednesday, 11:30. Again, more sort of Caxton data, pretty flat from China. PMIs, ADP looking like a little bit of a slowing down here. So a little bit weaker on the numbers there again. ISM services, again, pretty flat, but still above 50 is obviously still somewhat of an expansion. And then sort of, I think moving on, the rest of the week we've got, so we actually have ECB as well. So they're looking to drop 25 base points. Obviously, sort of weakening euro, and that'll give DXY a reason to have a little bit of a push. And then, of course, we finish the week out with NFP. Again, a little bit of a tick up. See how they go with this one to see if they get some rockets coming out with this one here. But interesting to see how these sort of numbers. I mean, this is I think ADP is probably more the private sector, but see how these numbers may be affected in the coming months. Probably nothing now, but certainly that was something that they attributed. Even though I've heard mixed reports on this, they attributed the unemployment numbers going up last week, unemployment claims going up last week to all those sort of firings, but I don't think that's been actually filtered through yet. So I don't know if that is truly the case. So we'll just have to wait and see. But certainly, if you look at the sort of direction that's been moving through Feb, 208, 219, 220, 219, 220, 242, it's moving in that direction. This is what I say that's sort of like, it's not all rosy for US data at the moment. So it's not like every tick is going into, yep, boom, they can hold rates higher for longer. There are some cracks that are starting to form, but the US dollar is being held up by all this tariff talk. So if you take the tariffs away, if you take away the pillars that hold up these things, if it's not being held up by US data, and then it's being held up by tariff, the tariff gets taken down, well, what's holding it up? And that's where you'll start to see a little bit of a US dollar sell off and maybe a move back down towards that neckline. Anyway, that's it from me.